On the oh, I closed that picture, didn't I? Yes, I did. On the trade from last Thursday, our risk was 10 pips. On this euro dollar trade, our risk was 13 pips. And on the CAD trade, our risk was 15 pips. All right. And we walked away pretty good. Yeah, we booked $1,150 and we closed this dollar CAD trade early. I just want to show you a picture here of where the dollar CAD was. And let me slide this over so you could see it. You can see at one point I followed the trade through, and if you see here, the dollar CAD at this point was up. Oh, let me open this up a little bit so you can see it. All right, I'll do that and bring this down here. And you can see that the dollar CAD was right near my take profit. I hope you guys can see that. And you see how it tapped it. It tapped the take profit, but it didn't give me the spread. So it didn't get me out of the trade. All right. So I'm just taking this picture to show you that while we exited the trade at $150, it was up considerably higher. Okay, it was up as much as $250 when it came here and gave me that tap, but it didn't give me enough to get out of the trade. All right, and that was a follow-up I just did in the middle of the night, just to keep everybody on point. As we look at the euro dollar right now, if I were to ask you, and this happened while we were talking, but this morning when I turned on the euro dollar chart, if you remember the 4 building blocks of price action and where are you, this morning on euro dollar, we were in an absolute wedge. And it was an easy to see wedge and easy to trade. All right. So our entrance on the wedge would be just the outside of the wedge. And we're not using any indicators for confirmation right now. I just want to talk about naked charts. Our stop is at the last touch of the wedge back here. This is another one, 10 pip stop. And it went up about 15, 16 pips already. All right. But again, today is non-farms payroll. So that may just blow everything out of the water. All right. As far as expectations of where we think price will go. Let me zoom this out a little more so we can come back to it. Now, again, I got out of this at $150 because I'm not sure what's going to happen with non-farms payroll. And that's going to be released in about 30 seconds. So I just want to let that happen and we can watch it. Now, what non-farms payroll is, it's a news release in the United States that's the biggest news release of the entire Forex calendar. And it talks about the number of jobs created or lost in the U.S. economy. And since the U.S. economy, right now anyway, is the economy of the world, that report will have a major effect on movement in the market and can cause some really dramatic drives. You look at the spread here in the lower right hand corner, guys. Remember I said 1 minute before the news, the spread will dramatically increase. You see that? And that spread was up to 10. And if you look at over here, the spread was 11. And now look at these moves. And had I stayed in the trade, I would have hit my 30 pips take profit, but that's okay. All right. So this is what happens on the first Friday of every month. You get this particular news report called non-farms payroll. For those experienced traders, I'm explaining all this because we do have some new people in the room, and I promise to give them more specific time today. And boy, I would have certainly got my 30 pips and more, but I'm not upset in the least bit. All right, now let me see what the number was I don't have Bloomberg on or any of the news channels. Let me close this and I'm just at a news site. Let me just recycle it. Just waiting to see what the numbers are. And it appears that the number was not good for the dollar. Okay, because as the dollar CAD is going down, that means the dollar is weaker than the Canadian dollar. You see that? And here the euro dollar is going up, and that means the euro is temporarily stronger than the US dollar. You guys understand that? Okay, so yeah, Mike is saying that the actual number was 113. All right, so they were expecting many, many more jobs to be created, and it didn't happen. So you see this dramatic move on the first Friday of every month. Right now, it's moved already 60 pips and will probably go considerably more during the day. But the other key thing I want you to realize is that during this jump, our spread went from 2 pips to 18. So even if you tried to get into this right here, you wouldn't have been filled until in here somewhere, 18 pips later. All right. So that's the one thing, to really be careful of when you're trying to trade news. Now, for the newer people in the room, I'm going to move over here. I'm going to slide a web page over here. This is what do you call it? This is a website called Forex Factory. And this particular website is where most traders, not all of them, but a great many of the retail traders get their information about which news events are coming out. And what they do is they list the news event here, the titles, what the particular news event is. Okay. These folders, the color of the folder tells you historically if this news event has been a big mover, a moderate mover, or a small mover. If the folder is red, that means that this particular report has usually been a very, very strong mover. It's been a very, very powerful mover. And it could move the market dramatically. Okay? If the folder is orange, it means it can move the market sometimes in a strong fashion, sometimes in a weak fashion, but historically it's kind of in the middle. If the folder is yellow, it indicates that historically it's generally been it's generally had a rather weak reaction. The market has generally had a rather weak reaction to this particular news announcement. All right, for the new guys, are there any questions on this aspect of it so far? Forexfactory.com, and you would go to the tab that says calendar, and it brings up a list of all the news events that are going to be released today, Friday, and this is adjustable. You could show a week or more if you want to. Okay, here's somebody trying to open their mic. I'm not sure who that was. Okay, so it lists the news event. Now you can have like a week's worth of news events in this column. All right. And as you can see, if I hit more, this goes for Saturday, Sunday. So you can know ahead of time what major news events are coming out. And there are people that only trade the news and they do very, very well. But they've really specialized in it. They've understood all the subtle nuances. They understand all the traps. They understand all the possible things that can happen and go wrong. So there are a number of people that do trade the news very, very effectively. And down the road, we will talk about trading the news and how to trade it. Okay? So for the news, for the new people, or or for Joe's people, forexfactory.com is where most retail traders get their information, all right, as to which news events are coming out. And here you can see the actual number. Today was a 113, and you see it's red, which meant it's bad for this currency. So if the number comes out red, it usually means it's bad for that currency. In this case, it would be the US dollar. Okay, if the number comes out green, it means it's good for this currency. And in this case, it would be good for the Canadian dollar. So that's why you see, in part, that dramatic move on the dollar CAD. All right. Now, over here in the back where it says graph, let's just double click on this graph. And, all right. And what this does is it brings up all of the information for all of the non-farms payroll reports back in history. All right, so you can get a good look at what has gone on. You can see if there's a trend developing. There are some people that would, in their mind, draw a trend line down here, and they would expect the number maybe to bounce off the trend line, that kind of thing. There are different ways that they can do this. Different ways that they can use this information to make a trading decision. And let me untick this box, and you'll see something here. You see, these are the actual numbers of the releases here. And if you click the forecast box, you can see what they thought was going to happen versus what actually happened. All right. So you can see in the last three reports, they wanted a higher number. They forecasted a higher number. But if you look at the blue bar, the histogram, you see we got a lower number. So it's another way traders can take a look at this and get a bead on which way they think the market is going to move. All right. Any questions on that? And we'll go into this in detail, but I just want to get just give you guys a general idea of what's going on. All right, so if we're good with that, now I'm going to take a look at this before we get into any structured lesson. I want to take a look at this, and again, this is that question I ask myself. Everybody pushed this thing all the way down to this point. They pushed it all the way down, and then it stopped right here. So I want to know, why did it stop down here? So what I'll do is I'll put a horizontal line here. I'll come up just a little bit. And what I'll do is I'll go to a higher time frame, and I'll see if there's something in a higher time frame that would make sense. And then here we are right here. We've got this spike right out here, okay, which would make certainly reasonable sense why this price should stop here like this. All right, I always like to know why something happens. I don't take anything for granted. Yes, previous resistance, absolutely. And the other interesting thing here too, I'm not sure where this candle is going to close because it's still forming, but I wouldn't be surprised if this candle closed very close to this line, because this is another area of prior resistance here. All right, so you see that? We came down, we touched this, which relates to this point in the past, but we pulled back quite a ways from it, and I wouldn't be surprised if it stopped again right here at this level. Okay, Mike, we're not talking about S1 at the moment. I only want to deal with naked charts. Okay, I'm not saying you're wrong, but I do want to keep it well with the naked charts. All right, so I just want to recap. Let me go back down to I guess a 5-minute chart. For those that are just coming into the room right now, we had our trades from last night. If you remember these trades we set up from yesterday. And we were taking these trades on a 1-hour chart, but we went down to a 5-minute chart for our entry. Okay, we did the same thing on this chart. We looked for a setup on the 1 hour chart. We came down to the 5 minute chart for our entry. And as you can see, this, oh, I clicked the wrong one. And as you can see, this trade ended up being a nice profitable trade. All right. And we had a very, very minimal risk. And we picked our profit target from a higher time frame chart. We did it here. We did it here on this chart. Now this chart was up quite a bit in profit, the dollar CAD. And let me zoom in a little bit. You know what? Let me go to account history. Let me just pick the entry on the dollar CAD. And this was our entry on the dollar CAD here. And again, this entry was on a 5 minute chart, but our targets were from the higher time frame. All right, and our exit on the dollar CAD, let me open this up. Our exit on the dollar CAD in this case was manual because I wanted to not get caught in the non-farms in case it went the wrong way. Had I stayed in this trade, we would have certainly made our 30 pips take profit, which is this yellow line right here. No question we would have made it quite easily. All right. So in the 3 trades that we've called in the room so far, as far as dollars are concerned, we made $1,150 on the 3 trades. All right. The euro dollar trade had a 10 pip stop. The dollar CAD trade had a 15 pip stop. And this other trade, the euro dollar trade from yesterday, had a 13 pip stop. So our cumulative stops were only 38 pips if you added them all up. No, Richie, I didn't tighten stops. I just got out of the dollar CAD trade. The euro dollar trade, Richie, had already hit take profit overnight. Okay, so that was done. When I came to the dollar CAD trade this morning, this yellow line was my I put this yellow line near the take profit. And what happened was it hit my take profit a couple of times, but it didn't give me the spread. So it never got me out of the trade. And when just before non-farms payroll kicked in, I was up $150. And in my real life trading, I would have grabbed that $150 in a heartbeat because you don't let a winning trade turn into a loser. This was up as much as almost $300 right here. But as I said, it didn't give me the spread to get me out. Had I been aware and had I been at the chart, I would have more than likely grabbed this for the profit of somewhere between $290 and $250. All right. I didn't want to make any moves on the chart and unless I could show everyone in the room what I was doing. So that was my purpose for that, Richie. All right. And normally I don't tighten stops before NFP. I'm either all in or all out. Because if you look here, Richie, at my spread indicator, spread indicator, it went back normal. At one point, the spread on this particular pair had gone as high as 18. And you can see the spread on this particular pair had gone as high as 11. So had I tightened my stop, I would have to move to my stop plus 11 pips. You follow me? So it would have burned me. I could have ended up with a negative trade by moving my stops up before non-farms. So the whole idea is, don't turn a winning trade into a losing trade. And I tried to wait as long as I could so, the participants in the room could see what my reasoning was. Okay? The room should pay for itself for people if you trade every day in it and have the kind of profitability in there. Well, we're working on that, Phil. I don't want that to be the focal point right now. The focal point right now is knowing how to get in and out of trades with minimal risk, maximum profit, and using sound, simple logic. For those of you that maybe this may be their first day or two here, what we've been doing the last 6 trading sessions is we have been studying price action, and it's been my version of price action. Okay. Um, Jay, I went through this very, very much in detail over the last 3 or 4 days. Do you have the link to the videos? Um, and Jay, are you one of Joe's guys? Oh, okay. You guys that are new from Joe, what you're supposed to do is put a marker after your name so I know that. All right? And I thought Joe was going to contact you to let you know that. All right? This room is being hosted by the Pioneer Trading Academy. And I'm very grateful to have the opportunity to teach. Um, uh, you could put just J101 or something like that, or PT, put your initial and then dash PT. So I know it's Pioneer Trading, because today I want to really focus on you guys and ask you guys a number of questions. For many people in the room, the room just went down. Can you guys still hear me? It looks like the room just went down for some reason. All right, but you don't see my chart, right? Okay. Let me know if the chart comes back. Okay, someone's trying to send me a picture of something and it didn't come through. Okay, I'm not sure why that happened. But to get back to what I was saying, we've been concentrating on price action using simple, reliable patterns on the chart. We are not talking about indicators. I have like a month's worth of stuff to go through on all the different indicators and how they're designed and what they're designed to measure and all that. But until you understand what, at least in my opinion, okay, and Uncle Lou's opinion, until you understand what price is actually doing, all the indicators in the world will only go to confuse you. All right? And I wanted, to show everyone that you can make money with nothing on the chart except a candle and a straight line. Also, those of you that are using MetaTrader 4, you probably already know that there's a whole a storm of things going on with MT4 because they are upgrading their platform to build 600. And there are a lot of people having problems with their indicators are not working, their robots are not working. If you wanted to load an indicator or load a robot, it goes into a different file now. It's not the same as it used to be. And yeah, AO is saying he has a new build on one of his platforms and no problems. There are a lot of people that are still having serious problems. So some of you may be very, very lucky in that your indicators and EAs just happen to mesh with the new build. There are some people who have custom built EAs and custom built indicators that, because of the code structure, will not work with the new build. So it's getting a bit uh, complicated for some people. But my point in saying that is that my reason for teaching this the way I teach it is that if any broker in the world should ever go belly up, you can make money any place you go as long as you can get a candlestick chart and you can draw a straight line. Okay, this is about not becoming dependent on indicators. This is about becoming a sophisticated reader of price action. Okay? That's what this is about, really. At least the way I teach it, that's what it's about. So again, I want to reiterate, we had our 3 trades. All 3 were winners. There was only one trade that we exited prior to the take profit, and that was right here today because I knew non-farms was coming out. And traditionally, I don't like to leave a trade in during non-farms unless I have myself set up to trade it. And I didn't have that set up today. Okay. So I got out of the trade. I grabbed my $150, put it in my pocket, and I was happy with that. All right. Now, what I would ask is all of Joe's guys to leave the room and come back in with a marker after your name. So, Gene, come back in the room and put PT, like dash PT. Okay, Jay is back with 101. Yeah, okay, so Gene, use 101. Anybody else that's here from Joe, please exit the room and come back with a 101 because I'm going to pick on you guys today. All right, and I want to thank everybody else in the room today. You know, just be patient. I'm going to go through a lot of material that we covered over the last 7 days, and I'm going to go through it. I don't want to say relatively quickly, but I want to make sure that the Joe's guys are up to speed because some of them have different levels of expertise and experience. And the way I teach price action is very, very different than anybody else you've come across for the most part. All right. And I'm just curious, has anyone found this helpful at all? My way of doing this. If there's something I can improve, I would really, really like to hear about it. So if there's anything, you know, if you guys have found this helpful or beneficial, you know, please let me know. If you feel that there's something I can improve on, let me know that also, and I'll be glad to try to adapt because I enjoy teaching, and you know, I'm always trying to hone my craft. Can't lose password set by Pioneer. Can't lose. Gene, I don't know what that is you're saying. Gene, what I'm saying is exit the room, and when you log back in, you know that field where it says put in your name? Put your name in with a 101 after it. All right, Gene? Do you understand that? Hey, Rob. Rob Rice is a good friend of mine, a programmer, very good programmer. Good to see you here, Rob. All right. So just keep in mind that using the same things we've learned over the last few days, we've had 3 trades, 3 winners, $1,100 in our pocket, and one trade we left early and left $150 on the table. And again, keep in mind that we never had a stop on any of the 3 trades larger than 15 pips. And every one of the trades had a 1-to-1 or 2-to-1 or better risk reward ratio. The trade from last week had a 7.5-to-1 risk reward ratio. This is the type of thing that I'm trying to uh, educate you guys on. Yeah, and Mike is saying that somehow he did something wrong. He got stopped out on this euro dollar trade, and I'm not sure what you did, Mike. Everything was laid out here in the room for everybody to see. This was our stop loss way up here. It looks like it's a long way off, but if you actually measure it, it's 13 pips. You take out the, you follow me? And this was our entry, okay? And you see our take profit. So I'm not exactly sure what it was you did wrong. It could have been a typing error or something. All right, Mike. Yeah, well, eventually you'll get it right over and over. That's the goal. Okay. Um, Now for Joe's guys, I know that Jay, how long have you been trading? Yes, it does. Okay, you've only been trading for 2 months. Have you ever traded before? This is important. Oh, Sean just made his first trade using my technique, 48 bucks profit. All right, 10%, Sean, 10%. You know the deal. Okay, when you say nothing worked, are you saying that you've tried a number of things and they didn't work and you're new to Forex? Oh, Jay, do you have a headset? Do you have a headset, Jay? Yes, a microphone. Now, the reason I'm asking for this, Jay, is that everyone in here is pretty much, I'm assuming, over 25. Yeah, if you could turn your mic on, it'll be a bit easier. Now, I want to explain something about the learning process. Okay, everybody in here, I assume, is over 25, and which
And
means you're an adult.
which means you're
Okay,
an
Jay, is
adult.
that you?
Okay, Jay, is that you?
Yeah, can you hear me, Lou?
Yes, I can, Jay.
Yes, I can, Jay.
Okay, how are you, Lou?
I'm good. Tell me a little bit about
I'm good. Tell me a
your
little bit
history.
about your history.
Oh, I just started with the Pioneer trading. There was another teacher who's teaching, but I believe nobody made any profit with the teaching method there. So I just waited until the Pioneer trading has some other teacher like you to come up. So and I think I just need to build strong foundation. I mean, recognizing the pattern, the entry, and then analyze from there, just basically from scratch.
All right. Have you had any
All right.
background in candlesticks?
Have
What
you had
candlesticks
any
are?
background in candlesticks? What candlesticks are?
The previous teacher taught some basic ones like head and shoulder,
No, 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 no.
morning star, those kind
That's
of
a
things.
candlestick
That
pattern.
that's a candlestick pattern.
I mean
Mm,
specific
Nothing else
candlesticks.
besides the one that
I
I
mean
mentioned.
specific candlesticks.
I don't think
Okay.
so.
I believe Gene is in
Okay.
a similar situation where he
I
never actually learned
believe
anything about
Gene is in a
specific
similar situation
candlesticks.
where he never actually learned anything about specific candlesticks.
Correct.
Now, Jay, are you on a laptop
Now,
using the
Jay,
open
are
mic?
you on a laptop using the open mic?
I'm using iPad.
Okay, because there's a tremendous
Okay,
echo.
because there's a tremendous echo.
Okay.
All right.
I
Well,
probably will get a
All right.
headset over the weekend.
okay, great. Now, I sent
Okay,
Gene
great.
some
Now,
information that
I sent Gene some information.
concerning candlesticks that I found helpful. It wasn't one that I wrote. I'm writing my own, and I will send that to you also, so you can get up to speed just on basic candlestick theory, and then we'll move on from there. I'm going to put my email address in here. Um, okay. Um, Send me an email there, and oh yeah, Gene, you're talking about those videos. I know what you're talking about. The guy does a very good job explaining it, but he does have an accent that takes a minute to get used to. Okay, great. Now later on in the day, Jay, I will get that information to you. All right. So I'm assuming the only two people here, earphones from any device is all you need. Oh, okay, Daryl. Okay, didn't know that. So if you had a headset, then we wouldn't hear the feedback. I think I get you, Daryl. All right. I'm going to touch a little bit on candlestick theory here. I just don't know if there are any more of Joe's people here. I see a couple of people typing. I just want to make sure I don't miss anyone before I move on. Okay, good morning, Curry. And all right, we'll take it from there. All right, so our goal is to understand price action, be able to trade with price action, and make money with price action. So we're 3 for 3 so far. Not to say that we won't have a trade that won't work out, because it's trading. You can't always predict what the market's going to do. However, no, Daryl, headsets, well, yeah, they can be pricey, but you shouldn't have to pay more than $20 to get a decent one for what we are doing. All right, it's not like we need a broadcast quality thing, and you can look online and find hundreds of them at very decent prices. All right, Rob is saying just earphones will stop the echo. Yeah, I gathered that, Rob. Daryl mentioned the same thing. All right. So for the future, yeah, if you can get earphones or a headset, that would be very, very helpful. Um, Again, most of my focus today is going to be on Gene and Jay, unless Phil pops in the room also. I think he's one of Joe's guys. I don't think it's Phil 919, but we'll cross that bridge when we get there. All right. So let me bring up a naked chart, and I'm going to do a review, guys, of a lot of stuff we've covered already. So you don't have to hang around if you don't want to hear a lot of the review. But I wanted to get everyone up to speed. Let's pick a chart that I don't have up here. Let's pick pound dollar and open this up. Get rid of the grid. Okay, do that. Make it a candlestick chart, and we'll come over here to current time. Okay, great, Dal. Greatly appreciated. The reason I want to focus on price action is that number one, the chart never ever ever tells you a lie. Okay, a candlestick chart never lies to you. Number two, the market always moves in the right direction. These are two things that you really need to burn into your brain, is that the chart never lies and the market always moves in the right direction. Our job as a trader is to try to understand what direction the price that price is moving in, and then try to take advantage of it and try to turn it into cash. Okay, that's why we come here to trade. We want to make cash. All right. On the charts, there are three types of charts. There's a bar chart, which is the old school way of looking at candles. Okay. And with a bar chart, you have your high is here, your low is there, and this nub to the left is your open. The nub to the right is your close. And this is what many, many people use for a great many years, were bar charts. Okay? And you can certainly use them. I find bar charts are better for new people when they're trying to learn various chart patterns, because there's less information for the eye to interpret. Okay, so if you're trying to learn wedges, like it's kind of easy to see that this is a wedge on a bar chart. You don't have anything except the lines on the bar chart. You follow what I'm saying? So bar charts do have their place if used correctly. It's easy to see that this is a price trap on a bar chart. Right there. See that? None of these candles could get outside of this high or low. Now I'm going a bit advanced, but I will back up and I'll go back to the beginning. So with a bar chart, many of the basic chart patterns are easier to see. Okay. The other type of chart is a line chart. And with a line chart, what they're doing is they're just simply making a spot on the chart based on price movement, and they're representing that in the form of a line, of a straight line. And Phil is saying candles emphasize the open and close too much unless you can get much thicker wicks. But bars feel harder to read for me. Okay, well, it's yeah, Phil's saying that bars are harder for him to read, and it's a personal preference. There are some guys that still trade forex with bar charts. Nothing wrong with that. Absolutely nothing wrong with it. But when you understand the three types of charts, there are advantages to each of the three. For instance, I'll go back to the bar chart. With the bar chart, it's easier to see certain patterns because there's less information to clutter your mind up. So for instance, if we're doing wedges, here's another wedge. Very easy to see because you can see all of these bottoms right here getting higher. It really is relatively easy. If I roll out a little bit, I'm going to talk about some advanced patterns at the moment, but it's easy to see this 1, 2, 3 pattern right here. You see that 1, 2, 3, and overall you can see when we get into this really looks like a letter M. This is a real powerful formation here. Okay, a 1, 2, 3 pattern kind of looks like an M. It's easier to see for many people on a bar chart than it is on a candlestick chart because it's less visual information you have to interpret. Okay, and again, you see right here we have a price trap where we have this candle and none of the other candles could close above this high or below this low. It's easier to see on a bar chart for some people. The other type of chart is a line chart. Line charts have their advantage in that one easy thing to do with line charts is to connect your trend lines, and how one particular trader likes to use it is he'll put a trend line here, and when price goes below that trend line, he's short. Okay, or he could have done, or she could have put a wedge out here. Same thing. So with trend lines, you can, with a line chart, it's easier to see the high and low peaks. Okay. And again, it's less information to interpret. You can go break that trend line for a short. Let's go to current time and just see what's going on here. So in current time, we would have had these two, and then you could have taken a long trade above here. There's a bit of a technique to it, but I'm just showing you a couple of very simple things. And then this would be our trend line here. If we close below this trend line, this would be our target. All right, so line charts have an advantage also. It's a matter of, and there are 2 or 3 strategies I have for trading line charts that are actually very, very good. And we'll get to that as time goes on. The most popular type of chart is a candlestick chart. And in a candlestick chart, and I want you to notice, you noticed how, okay, let me take this off. Let me just get rid of these lines altogether. You see with a candlestick chart, you may not have easily seen this wedge simply because you see the width of the candles, you see these candle bodies, like you're absorbing more information that's taking you away from like the simplest things in front of you. Okay. I'm just trying to read. John, HA candles are Heikin Ashi candles. That's a special candle that's not an inherent part of this platform. And I'll get to Heikin Ashi. I have Heikin Ashi strategies also. So, and what a candlestick chart is. A candlestick chart is based on what time frame you're looking at. So in this case, if you look up here in the upper right-hand corner, this is a 1-hour chart. What this means is that this candle in the middle of the screen represents how far price moved in that particular 1 hour. And you can see in this 1-hour candle, price really took a nice push up. It really did like some great movement. It went all the way up here, came all the way back. But then you look at the very next candle, even though this candle is far smaller, it represents 1 hour of time. So in this 1 hour, we had a lot of movement. In this 1 hour, we had basically none compared to the prior candle. All right. And again, I'm doing this for the newer guys just to get them to understand just basic candles. Okay. Here is a candle. Again, we're in a 1 hour chart. This is all the price movement of that entire hour locked up in that one candle. But look at the prior hour, the earlier hour. And again, this is the same amount of time. It's 1 hour. The candle is showing you price movement in that 1 hour. This is very important to understand, okay? Each one of these candles represents the exact same amount of time. Okay, so all the candles represent the same amount of time. The size of the candle represents the amount of movement in that time. Okay? Candles are comprised of 4 pieces of information that are very, 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 very important. All right? And now, some of these candles, you know, I should change these. Let me just digress for a minute and just change these candles here. Oh, you know what? I'll go to a black and white chart. That'll be easier. Okay. Now, these white candles on this chart represent price moving higher. The black candles on this chart represent price moving lower. All right. In order to make a white candle, we have to start at a certain price, which was down here. We started at this price. Oh, let me change that. And let's just make this, okay. We started at this price. This candle opened. This candle closed at, let's say 9 o'clock. Okay, this candle closed at 8 o'clock. This candle opened at 9 o'clock. Do you follow that so far, Jay and Gene? This candle closes at 8:59. This candle opens at 9 o'clock. Okay? At 10 o'clock, the candle closes. All right? So this is 1 hour of time. Understand that. And at 10 o'clock, the candle is going to close. And this is the 10 o'clock price right here. That's the 10 o'clock price. So we opened here. And let's just say this is, let's just say we opened at price 125. Let's say we opened up at 125 here. And then by the time the hour was open, remember, this is going to close at the top of the hour. It doesn't matter what's going on elsewhere. And then when this candle closes, this candle closed at 155. So because the candle closed at a higher price than when it started, we get a white bar on this chart. This is called an up candle. This is called a bullish candle. When candles get higher, it's considered an upward trend. A nickname for it is a bullish candle. A down candle or a downtrend candle, the nickname for it is a bearish candle. All right? So if a candle opens and closes higher than when it started, it's going to be considered a bullish, an upward, or a positive candle. All right? Let's take this candle now. Come back here. Where were we? Let's take this candle. This candle opened at this price. Because remember, when this candle opened at this price, I'll do it this way. This candle opened here. And yet at the end of, okay, at the end of the 1 hour, it actually closed lower than when it opened. So what this means is that this candle could have opened at price 125, let's say. and this candle could have closed at price 85, which means, oh, I did the wrong thing. Ba, 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 ba. All right. So that means that this candle closed at a lower price than when it opened. When a candle closes at a lower price than when it opened, it is considered a down candle, a bearish candle, a short candle. You'll hear all of these words used to describe it. All right. So that's what happens here from the opening price to the closing price. In 99.99% of the candles, all right, the open and close, you'll see are leaving a wick behind. Okay, this top part of the candle is the candle wick or the shadow. All right, most times you'll hear the term wick. In some cases, you'll talk to people, they'll say the shadow candle. All right, so I know at 9 o'clock I started here, and I know at 10 o'clock I ended here, and I ended at a higher price than when I started. That's what makes an up candle, a bullish candle, a long candle. All right, now this is only talking about, this is opened at 9, closed at 10. All right, what the wicks represent is before this hour was over, price went all the way down here and went all the way up here before the hour was over. When 10 o'clock came and it was time for this candle to close, this wick is left as a bit of history to tell you what else happened during this hour. Okay? Jay, did you understand that? Gene, do you understand that? Anyone else have something they want to add to it? Because I'm trying to help two new guys get up to speed. And thank you guys. I thank everybody for being patient on this. All right, I'm going to move through this relatively quickly, but I want to make sure that they understand it, okay? So what these wicks, and the wick is that thin line at the top of the candle, and you just think of a regular household candle, and this is the wick of the candle. This is where you would light it with the match. And then there's a wick on the bottom also. Okay? So now understand, if I open at a low price and end at a higher price, that's a bullish candle. It's a long candle. It's an up candle. Okay, Daryl. Daryl's saying that there's a 5-minute price trap. Okay. Your job, Daryl, is to go to a 1 hour chart, a 1 minute chart and set up a trade. And I'll come back and we'll take a look at it. That's your job, Daryl. Now that you found a price trap on a 5 minute, you go to a 1 minute and set up a trade. And you should know all the rules. Okay? You look at this candle here. You see how we have a long wick on the top and a bit of a wick on the bottom. But you see this candle is just a little bit white. You see that, Jay and Gene? So what that tells me is that this candle may have opened at price 100 and it may have closed at 101. Did you follow that? As long as it closes the tiniest bit higher than when it started, it is a bullish candle. All right? Now, I want to explain another way of looking at the wicks, because there's a lot of information in candles when you understand how to decipher it. Oh, let me just get all this off the chart. Okay? Let's assume, Jay and Gene, that you're like a teenager, like 12 or 13, and you want to, you're asking your mom if you can go out and hang out for an hour. Okay? And now, your mom says, all right, listen, it's 9 o'clock right now. I want your ass back in the house at 10 o'clock. All right? As long as you're back in the house at 10 o'clock, everything's good with me. But you leave it at 9, I want you back here at 10. Now, what the candle wicks represent is where you went during that time. I know you started here at 9, but let's say at 9, from 9 o'clock to 9:15, you went to Joe's house. and then you hung out there for a little while, and then you decided, you know what, from 9:30 to 9:45 you went to Bob's house, and that's what the wicks represent. But at 10 o'clock, as your mom said, you came back home. So the wicks represent where you have been in that 1 hour. What's the farthest you traveled in that 1 hour? What's the farthest you've traveled to the upside? What's the farthest you've traveled to the downside? Okay, same premise with this candle. It's a 1 hour candle. And your mom is saying, okay, it's 10 o'clock right here. At 11 o'clock, I want to see you in the house. From 10 to 11, you could go all the way to one end of town, come all the way back and go to the other end of town. But at 10 o'clock, when that candle closes, you're home. Okay, so do you understand that? The candle wicks represent the extreme ranges that price went to during that 1 hour. Okay? So if we wanted to get a little more detail into price, and you'll see all of this comes into play later. The open to close of this candle, we can measure it with a crosshair. I don't know what platform you're accustomed to, Jay and Gene. But on the MetaTrader 4 platform, we can measure various things using our crosshair. All right. So if we start at the bottom of this candle, now I know to measure, you know why I know how to start at the bottom of this candle is that on this chart, the white candles are the long candles, the bullish candles, the up candles. So if I see a white candle, I automatically know that it started down here at the bottom. If I see a black candle, I automatically know that my start of the black candle was at the top. Do you get that? Okay, Jay is saying we don't use anything, meaning you don't have a platform, Jay? Is that what you're getting at? You haven't picked a platform? Okay, well, we'll work on that. But for right now, I just want you to understand what you're looking at, because once you understand price action, Jay, you don't even need a platform. All right? Okay, but you know NinjaTrader. Okay, cool. And the beauty of this is once you really understand price action, and you could see a great setup on a 4-hour chart or an 8-hour chart, you don't even need a platform. All you need is the name of the broker. You could call up your broker and say, put me in a short trade right here. And this is my stop and this is my take profit. So you don't even need a platform really. But 99.9% of the traders use them, which is, why we're going through this. Yeah, I use Renko's. I happen to like Renko charts, but I use them for a scalping thing I have on the pound yen, and I won't get into that at the moment. But right now, I need for you to wrap your head around the regular candles. Okay? So we understand now that if a candle is black on this particular chart, in most charting platforms, they use red and green candles. Red candles meaning that they're short candles, they're going down, they close lower than when they started. Or green candles meaning price is going higher, the price went higher than when it started. Okay? So all of this information in this candle is very, very important. All right? The 4 bits of information in a candle that you get is the opening price, the close, oh, I'm sorry, wrong way. The 4 bits of information you get on the candle is the opening price. You get the closing price. You get the highest high that this 1 hour reached, and you get the lowest low that this 1 hour reached. Okay? So on any candle, you get those 4 pieces of information. You get the highest, you get the opening price, the closing price, the highest high, and the lowest low. All right, I'm going to get rid of these. On this particular platform, if I put my mouse on top of this candle, if I look down here, and you see where my mouse is at the bottom of the screen here? Can you see that where it says default and it's got these boxes in here? You guys see that? Gene? Okay, great. If I put my mouse on top of any candle in those boxes, it gives me all the data for that candle. So in this case, my opening price was 1.62931. That's the open. Now, because the candle closed bullish, I know that my closing price is going to be higher. So you see that you have the letter O is the open price. H is the highest point that candle reached in 1 hour. L is the lowest point that candle reached in 1 hour. And C is the price when that 1 hour closed. So you see that information there. The open, O, high, H, low, L, close for C. All right? Open, low, high, and close for that 1 hour. And then if I move it to a different candle, I saw Rob was trying to type something. If I move to a different candle, you see all the numbers change because now I'm measuring a different candle. So now the open on this candle was 1.63312. And because it's a black candle, I know that the closing price had to be lower than where it started. And if we look at the closing price, it's 1.63182. Okay? And the other piece of information I get is the highest high that candle went to in that 1 hour was 1.63441. And I know that the lowest price that that candle went in that 1 hour was 1.63109. Okay, Rob is saying something's not coming through on your screen. Everything else is. Rob, are you saying that the picture is not coming through? The block with the data. Oh, that could be. Sometimes these things get buggy, and if you have like a sub window, it won't show up. That's a good point. Gene, are you able to see those small boxes in the lower the lower right hand corner of the screen? Oh, you're not able to see it. Oh, wait a minute, wait a minute. Let me shrink this a little bit. Okay, are you guys able to see it now? Okay, because I had this on full screen and it may be overtaking it may be wider. Thank you, Rob, for that. I appreciate that. I just want to see they have been visible the whole time. Okay, but you know what it is? Everyone has different size monitors with different resolution, and it's quite possible that on the resolution on their screens, the screen may have been blown up so large that it cut off the bottom of the screen. Okay, yeah, Rob was saying he was looking for the box that pops up at the candle, and that's what didn't happen here. I need to cross here, I think. No. Okay, but let me go back to this. Now, does everyone see these numbers down here in the lower right-hand corner? Can everyone see those numbers now? Okay, great. So for new people, this is where you can get the information at a glance. If you use a crosshair, if I put my crosshair on, if you follow the crosshair all the way to the right hand side, you'll get the exact number at the horizontal cross. Okay? So it's another way you could do it. And in MetaTrader 4, if I put my crosshair at the top of the candle, if I hold the left mouse button down and drag the mouse, I get 3 numbers. The first number is how many candles I've moved from the start. So I'm on the same candle, so the first number is 0. The second number is how many pips from where I started. In this case, it's let's say 37.5. The third number is the exact price at the crosshair itself, where the horizontal and vertical lines meet. That's the exact price where the horizontal and vertical lines meet. So that's another way of processing or measuring what's going on in this candle. You follow me? So I can take my crosshair, I'm going to go to this large candle over here, and I can by hand start at the top, left click, hold the mouse button down, drag it all the way down here to the low, and I can see that this candle had an ultimate length of 62.5 pips, let's say. That's another way of measuring the data. Okay? Now, that's two different ways you can get the data for this candle so you understand what's going on. You can measure it by just putting your mouse on top of it and looking at those numbers in the lower right-hand side. You can take your crosshair and you can drag the crosshair and measure it that way. The third way is how many programmers look for data is in something called the data window, and that's this icon right here on this platform. So if I click this data window, wherever I put the mouse, it'll give me all the information for what I'm pointing at. And it's the same information you'll see that's down in the lower left, the lower right-hand corner. You see that? I can open the data window, and I can see that my open price is 1.63461. And you see that it's the same thing in the lower right-hand corner. Jay, do you see that? Okay, Jay, do you see that? Are you still with us? Okay, great. How this information can become important would be for a programmer, just so you understand how data moves around. I'm going to put a moving average on the chart. Moving average and a 14. Okay, that's fine. So let's say that you wanted to build a trading system, and you wanted to tell your robot that anytime price goes above this red line, which is a 14 moving average, I want you to enter a trade. Well, what a programmer could do is look for this data in the data window. So now, if you see in the data window where it says MA14, it's measuring the moving average. And it's going to give me the price of the moving average at the exact point that I put my the mouse on the chart. You see that? Okay, so on this candle, my price on this candle on the moving average, okay, I'm going to put my mouse right there. If you look in the data window up here, you'll see that I have a price of 163001. Also, if I look in the data window at the close of this candle, you'll see that the close is 163307, which means it closed at a price higher than the moving average. So a programmer could look at this information and then write a piece of code that would get you into a long trade at the open of the next candle, or at the close of this candle, but in MetaTrader you can't do that. It's going to be the open of the next candle. I think I got that right. Okay? So that's where all of this data comes in handy. I'll put another indicator on the chart, just so you can see how all these prices work. I'll put a MACD. I'll put a generic MACD with the, let me just make this blue so we can see it. Okay? So now if I put my mouse on this bit of information here, you'll see that the MACD now gives me a number. The MACD gives me two numbers. It gives me the number of this blue line, and it gives me the number of this red line. And I won't dig into it very much, but a programmer can take these numbers and build a system out of them. So that's why the data in the candles can be very, very important. Okay? I just want to delete this indicator list. MACD, delete.